it's much more difficult for us to distinguish in the data to say this customer is using crypto for remittances versus arbitrage trading, for example, between different crypto platforms. So we know that the rise in adoption in Africa for the last 10 years, it's primarily driven out of need, and it's been largely from a grassroots level perspective.
Hello, and welcome to Public Key, the podcast from Chainalysis. This is your host, Ian Andrews. If you've been glued to your laptop watching Bitcoin prices go up, then you may have missed the much anticipated release of the 2023 Geography of Cryptocurrency report. It's the most comprehensive analysis you'll find on regional crypto adoption. Today I'm speaking with one of the contributors to the report, Marius. He's general manager for Africa at Luno, one of the leading crypto exchanges in the region. Luno operates in hundreds of countries around the world, many of which are on the African continent. Marius and I discussed the differences between South African arbitrage traders and the more retail and remittances focus of their Nigerian customers. Marius shares his early journey into the crypto industry and highlights the importance of education to bringing new users on platform. And of course, we can't let a week go by without talking about the regulatory landscape. South Africa is quite progressive in their approach, with a license scheme specifically for crypto businesses being required before the end of 2023. And after the conversation, if you want more data on what's going on in Sub-Saharan Africa, well, head to the show notes and you'll find links to the blog and to download a copy of the 2023 GEO report. Today I'm joined by Marius, who is General Manager Africa at Luno. Marius, welcome to the show.
Hi Ian, thank you very much for having me today. Look forward to the conversation.
I think you absolutely qualify as being crypto OG, right? You've been at Luno for over 8 years in a variety of different roles. You're now running the show on the African continent, which I'm excited to talk to you about. But I'm always curious how people, particularly people of your vintage who have been in crypto for a long time, like how did you first encounter cryptocurrency, and then what made you want to move into the space professionally?
So my crypto journey started in 2015. It was actually by chance. So I was still in my traditional accounting role, 8 to 5, and one of Luno's co-founders, Peter Haynes, who was the CFO at the time, pinged me on LinkedIn. He was saying that, listen, BitX, which was Luno's first name, just went through a fundraise with Naspers, and Naspers is an African tech holding company with shares in Tencent. So Naspers at the time just invested, I think, $5 million into BitX in the end of 2015. So obviously, being a share trader myself, Naspers attracted my attention, and I think I was due for a new challenge in any case. So I worked in business rescue work, audit and accounting work. So yeah, I think in general I was up for a new challenge. So I took the interview, had a couple of conversations, a couple of barbecues or braais on the balcony of the small BitX office. And then I think ultimately, what convinced me to join the team was the global nature of the operations. There was opportunity for me at the time to work with Nigerian customers, Nigerian stakeholders. Similar at the time, Luno was active in Malaysia as well. Luno had just launched in Indonesia. There was a reach in operations across emerging markets, mainly Africa and Southeast Asia. So that was quite appealing, I think, being able to work across many different currencies, different cultures. But of course, I didn't have that good understanding of the technology behind Bitcoin. So for the first year, I still wore 100% finance hat, did the debits and the credits. But I think due to the nature of startup companies, I think I was employee number 13 or 14 at the time. You know, the hands-on nature of the business. I was helping out in customer support and compliance and a bit of marketing. But the real first encounter that I had with crypto users, the crypto early adopters, was midway through 2016 when a colleague and I traveled to Nigeria. It was just 6 months after Luno launched its operations in Nigeria, and we hosted a Luno/Bitcoin meetup in Lagos in mid-2016. Now that was very, very early on. And we managed to fill it was called the Co-Creation Hub, which is a startup incubator co-work space in Lagos. We managed to fill that venue.
Wow.
the enthusiasm and the interest from the Nigerian public was just mind blowing. And I think the key point there is that I first hand experienced the challenges that people the mass market experience on a day-to-day basis in terms of the, I think, unmet needs or needs not being met by the traditional financial system. And I think from there I started getting more involved in other aspects of the business and started interacting more with customers as well.
Now, in 2016, what was the landscape of crypto like in South Africa? When you took the job, you left your accounting job, which is probably seen as very secure and conservative role, and you jump into this startup crypto company. Did your friends and family look at you like you were crazy?
Yeah, I think there were many skeptics out there. I
Yeah.
did convince my dad to also invest in Bitcoin in 2016. So I think
Wow.
no regrets from his side. But yeah, so I think the market was mainly retail market, early adopters. Trading volumes on Luno's exchange and in SA was low. I think only until the 2017 bull run from June 2017 did we see volumes on the exchange spike. Yeah, it was very, very slow going in countries like Nigeria, and countries like Malaysia. And I think the challenges were apparent, right? I think there was a complete lack of education. So we had to do a lot of educational work. We also still had operational challenges at the time. So it was not as safe and well, we tried to make it as safe as possible. And that's the nature of Decentralized exchange acting as an intermediary. But it was not as easy as possible for our customers to transfer Naira or Rands or ringgits from their bank accounts to Luno to purchase crypto. So that was one of the biggest challenges still at the time. Liquidity, of course, the markets were not as liquid as they are today. So that was also a challenge for us. It was not only smooth sailing, that's for sure. The journey has been riddled with roadblocks and challenges, and we take the long road, right? We follow an approach of hyper-localization. We establish a local presence in each of the markets in which we operate. We have put local boots on the ground. As a result of that, we wholeheartedly believe that that's still the best model for us today to make it as safe and easy as possible for public to dip their toes in crypto. I think as a result of that, we have had to manage quite a number of challenges over the last couple of years.
Tell me more about that. So Luno's in 40 countries around the world today. Is that right? I recall that from the notes when I was researching. Like where in the world do you see the most interesting market opportunities and conversely maybe some of the biggest challenges?
We have customers across 40 markets globally. We are active across 3 continents, Africa, Asia Pacific, and then also Europe. We have just over 13 million customers globally at this moment, but the largest section or portion of our customer base being in emerging markets, so between SA, Nigeria, and Malaysia, and we view those 3 countries as our core markets. We have offices around the world, so Cape Town is our global operations hub, so we have a team of just over 350 team members based in Cape Town. I'm based in Johannesburg. Johannesburg is our African HQ. And then we have our global HQ in London. So we also have a team on the ground there. And then local teams in Kuala Lumpur, Malaysia, Jakarta, Indonesia, and then also in Australia. So I think we spread out across the world, but we have our base firmly set in South Africa. I think probably around 2/3 of our global workforce being based in Africa. And we follow a similar model in most of these markets. And I think that is what we're good at. That is the skills and expertise that we've built up since launching in 2013. And by the way, we are celebrating our 10-year anniversary this year.
Congratulations! That's amazing.
No, thanks a lot. I think I think we were probably one of the first traditional crypto exchanges to exist back then, and I think we're one of a handful of crypto exchanges that existed back then that still exist today. And I think of Bitstamp and Coinbase and those names. It's been 10 eventful years, yeah, we're just grateful. I think the one thing that's very clear is that there's still a growing demand for cryptocurrency, and especially in emerging markets, and that is what gets us up in the morning.
I'm curious about the perspective, given that you're operating primarily in emerging markets, thinking about the role that Luno plays. I mean, obviously you're providing custody and you're facilitating transactions, but I'd have to imagine there's a lot of education that goes into it as well, like explaining just the basics of how do you purchase cryptocurrency, how do you hold cryptocurrency, what are all the different cryptocurrencies? Is that the case?
Definitely. I think it's no easy feat to educate people that know nothing about crypto.
Yeah.
And I think that's the role that we play. We see ourselves as an intermediary. We don't we don't try and convince people to invest in Bitcoin or to invest in any crypto asset. We provide people with information and the knowledge to do their own research, and then we provide a safe and easy to use platform and products for them to enter the space. So it's an ongoing process. We obviously have many efforts that run through marketing, through the traditional channels in terms of social media. We also host in-person meetups. We also have education built into the app. So we've contextualized many of our products and services from a crypto perspective as well. So we educate the customer through that journey. But it's been tricky, right? Because especially if you operate in emerging markets, because there are many challenges. And if you look back to 2015, 16, the 3 or 4 African markets that the continental leaders back then from a crypto adoption perspective, they're still the leaders to this day. South Africa, Nigeria, and Kenya, right? And then there's a long tail of other smaller markets that also increase volumes, transactional volumes, but only slightly. And I think the main challenge with expanding into as many markets as quickly as possible is firstly around education. You can't create a crypto market out of nowhere in each of these markets, replicate localized effort in terms of setting up local entities, local regulators, local bank accounts. And so what we had to realize very quickly was that it slows you down and it can actually be very costly if your client market is the mass market in each of these countries. So we have to, I think, so there's different strategies in different markets. Some of the new African markets, the focus is purely on sort of the early adopter community, those with existing traditional investments, those with sort of the banked segment of the market. In other markets, like in SA, it's also focused on those with bank accounts and those that are included in the financial system. But we have a little bit more room because of scope of the operations, our established processes around education, the advanced stage of regulations that we can also now start to really focus on providing a safer on-ramp for those in the unbanked sector. So those that are not financially included.
Yeah, in the past, we've had some terrific guests on the program. Ray Youssef of Paxful, his Built with Bitcoin initiative seems to really go at the heart of the unbanked audience, like teaching basic financial literacy and then extending that to the opportunity provided by Bitcoin. We've also had the founders of Busha, one of the Nigerian exchanges, on the program. And they told some really interesting stories about, the challenges of international currency controls. And so anyone trying to run a business that, imports goods or raw materials from outside of Nigeria is incredibly challenged by the traditional financial system. And Bitcoin and stable coins have sort of opened up a new financial services path for them. I'm curious your reaction to that. Like, is that consistent with what you're seeing in your business, where access to global markets is a big driver for customers of Luno?
Firstly, I think it's safe to say that African crypto firms and also crypto investors and others are probably some of the most resilient and creative people globally, considering the extreme operational challenges that we experience. But despite that, the African continent still contributed billions in dollars in transactional volumes, right? I think in your report you state that it represents 2.3% of global volumes.
Yeah.
But we categorize the use cases into categories. It's those with unmet needs, and I think that sums up, the category of crypto holders that buys crypto as a hedge against political instability, as a hedge against local currency devaluation. You mentioned import restrictions and issues with cross-border payments. That's absolutely also one of the drivers, and we're seeing that especially play out in Kenya and Nigeria, where there's dollar shortages. Individuals, but also small businesses, simply cannot access dollars to continue trading and to continue earning a living, right? And so I think there are definitely elements of that. It's much more difficult for us to distinguish in the data to say this customer is using crypto for remittances, versus arbitrage trading, for example, between different crypto platforms. So, but we know that the rise in adoption in Africa for the last 10 years, it's primarily driven out of need, and it's been largely from a grassroots level perspective. And I think it just, again, shows the creativity. We issued a white paper a couple of years ago, and one of the key findings that we highlighted in there was that people in Africa tend to be more creative in finding ways to supply for their families. And so, when people face a hardship, where they need to put food on the table, when they need to pay for school fees, when they need to pay for bonds, they tend to take on a little bit additional risk as well in trying to generate additional yield. And you can argue that out of need, but there's also an element, in the need to generate higher yield on and the need to let their money earn more return for them. So yeah, I think that Nigeria, Kenya, and South Africa is, again, different demographic, different reasons. In SA, you see more sophisticated crypto traders, traders trading high volumes, high frequency, low margins. There's a rising and growing arbitrage trading use case in SA as well, and that's primarily there because of the price differences between the dollar price of crypto and global platforms like Coinbase, Bitstamp, and the rand value of crypto in SA. And that premium exists because of the existence of capital controls in SA. So it's not as easy to move funds cross-border and to move funds back into SA compared to other markets where capital controls are less restrictive, right? So that premium exists, and many of our traders, which is good for liquidity and also good for stability of the local market, trade arbitrage. So they move large volumes between local platforms and overseas platforms and earn relatively small yield on those high volumes. Yeah, I think it's interesting to see within the same continent how different use cases have emerged and how people's need differs, between different markets. But just the one thing on remittances, I think, as I said, it's very difficult for us to distinguish between regular crypto payments to Bitcoin address and remittances. I think probably the vast majority of the volume is still associated with Bitcoin as a store of value or Bitcoin as a means to speculate or to trade. Right? That's contrary to popular belief. I think that's still the predominant use case across Africa.
The arbitrage trade is fascinating, right? Because that was some of the very early days of Bitcoin trading, was the US to Japan market arbitrage that I know made people a lot of money back in the earlier days of Bitcoin. I'm curious about something you said a couple minutes ago about the regulatory climate in South Africa. With previous guests, we've talked about some of the challenges in markets like Nigeria, where I would categorize it broadly as unfriendly towards crypto. Talk about the situation in South Africa. I'm much less familiar with that.
In markets where governments do not impose regulatory bans, right, such as the one in Nigeria, you typically tend to see the market flourish, grow more responsibly, develop more responsibly, and you see more interaction between the private sector and the public sector, right? And I think that's the role that we at Luno try to play. We share learnings and experiences that we've gained and built up over the years with regulators in each of our markets. For example, Luno was the first crypto exchange to obtain a license through the Securities Commission in Malaysia in 2019. Right? So that really gave us good learnings to share locally in SA. But the relationship with the SA regulators have been there right from the start. I think back to 2016 when we did a pilot with the Reserve Bank and the FCA in the UK and one of the SA banks where we tested a remittance product. So we were included in the FCA's first cohort of companies in the sandbox, right? So the interactions with the SA Reserve Bank started 2015, 2016 already. I think they from the start have acknowledged that they need to stay ahead of the market, that they can't afford to ban crypto players from operating or ban the financial institutions from banking cryptocurrency businesses. And I think that has done a lot to ensure stability in the crypto market. So what we see in Nigeria, for example, and in Kenya is completely different. There's still the same need for crypto. So the overall volumes in the market stays the same. You don't see a decline in volumes or you don't see a decline in demand for crypto, but you see crypto volumes shift to avenues that are less transparent and sort of more opaque, right? In SA, vast majority of the crypto volumes have continued to flow through centralized exchanges that are registered with the local financial intelligence agencies, that have clear lines of communication with the central bank, that are able to open up local bank accounts, which makes it a lot safer for our customers to buy and sell crypto in the local fiat currency. But long story short, I think all of those efforts have culminated in the Financial Sector Conduct Authority kicking off their license regime. So all cryptocurrency asset service providers had to apply for a crypto-specific financial service provider license between June and November this year. And we expect the first crypto FSP licenses to be awarded within the next couple of months. And I think it's a watershed moment for the SA crypto industry. We anticipate traditional financial institutions sitting on the sidelines to also enter the market. And as a fact, we know that many traditional firms have also applied for that license as well. So I think it's going to open up the market, hopefully inspire other African markets, to follow suit.
It's such a good point. I mean, this is consistent with all the research we've done here at Chainalysis, which is bans don't work. You can look at a market like China as a perfect example of this. Like the transaction activity that we can attribute into the Chinese inside the country there has not declined at all since the ban a few years ago. And I think your point about, do we want transparency in the market? Do we want well-run companies that follow the law? Or do we want to have kind of this black market operating on the side? Like that's a very clear choice, right? You create a ban, you're going to end up with this black or gray market type operation, or you can have a reasonable licensor scheme that provides transparency and responsibility throughout the ecosystem. So that's really exciting. I'm curious about your relationship with the traditional banking industry. Like if I'm living in South Africa and I've got Rand and I want to turn that into Tether or Bitcoin, how difficult is it for me to get money out of my traditional bank account and actually use it to buy crypto? Like, is it trivially easy for me to transfer to Luno, to my account at Luno, or is that a difficult operation for folks?
No, so it's very easy. And we're fortunate enough to have banked with Standard Bank since 2013. So our bank relationship also spans 10 years now. But it's easy over the years. We've also evolved the buying of crypto. So initially, customers could only do normal bank transfer onto Luno, obviously with the delays and the costs associated with normal bank transfers. And then a couple of years ago, we've added card payment options as well. So our South African customers can buy crypto with debit or credit card. And more recently, we've also added instant EFT options. So it's very easy. You can instantly buy crypto with Rand. And when you want to withdraw your Rands, we also process instant withdrawal. So within 2-3 minutes, the funds can reflect back in your bank account. So I think from an infrastructure perspective, South Africa. And again, it comes back to our point around bans and the unintended consequences of bans. So governments that impose bans expect bans to solve all the risks or to address the risks that they identify in terms of money laundering, in terms of illicit financing and flows, volatility. But in fact, it results in a more volatile crypto market. It results in much less visibility from a banking sector. And I have to say that I have to commend the SA Reserve Bank. Last year, around mid last year, they issued a guidance note to local South African banks where they cautioned them against the risks or the unintended consequences of de-risking their businesses from crypto, and said that if you de-risk yourself from crypto, so i.e. if you close the bank account of a reputable and credible cryptocurrency firm, you reduce your ability to effectively monitor transactions. Because what is happening, and that's what we're seeing in peer-to-peer markets in Africa. So the peer-to-peer business model absolutely gained a foothold in Africa, and it's great because it makes makes it possible for Africans to still purchase crypto. But people still use their bank accounts to purchase crypto. Instead of sending the payment to a centralized exchange with segregation of funds and controls, risk management, etc., that payment goes to another individual's bank account at another bank. So the flows within the banking system remains exactly the same. The counterparties to those transactions are just individuals that banks do not necessarily have visibility on. So, and that's the point that we've tried to convey Pan Africa to regulators. And that's the role we're playing to this day. We had excellent workshops with regulators recently in other African markets. We really try and assist with the thinking, assist with the processes. And I'm confident there's a lot of good potential for Africa.
It's really interesting as someone living in the United States, the peer-to-peer market is not something that I think many people talk about. Like the entry point for a typical American is a firm like Coinbase, right? Publicly traded company in the United States, like very well known. They run ads on TV, or maybe one of the fintech providers like PayPal or something like that, where you can now purchase kind of in the PayPal experience. So talk a little bit more about how people get involved in that peer-to-peer setup. Like if I wanted to buy crypto from somebody in a peer-to-peer marketplace, where do I even start? What does that look like?
So you have two different models. So you have the completely underground opaque model, and that is where people meet in chat rooms on private messaging apps, for example, and they establish crypto groups and they communicate and then send DMs and agree on a price. And you have to then actually send fiat currency to a stranger and hope and trust that they will release the crypto to you, right? So that's the one form. The other form is entities, companies offering a crypto custodial service. So they enable you to store your crypto on the platform, but the fiat leg happens peer-to-peer, right? So it's almost like an online marketplace. In SA, there's a company called Gumtree, right, where you can sell Facebook Marketplace, for example. Right? Those models have absolutely gained a foothold since we banned in Nigeria in 2021, but in Kenya since 2016. Right, Luno actually operated in Kenya. We had operations in Kenya. We had growing customer base until a similar ban was put in place in the end of 2015. And since 2016, the peer-to-peer model actually been the de facto model for way for Kenyans to access crypto, and they know no other model, right? So, and I think, and that's what I mentioned right at the start, the African landscape has grown very little. There's been a massively growth in demand, but the infrastructure across Africa has remained relatively the same since 2016. You have no new centralized exchanges operating in any African markets. You have one or two new peer-to-peer platforms. But for most part, the infrastructure is completely the same, right? And it's a massive challenge, and it's one of the reasons why you're only seeing 2.3% contribution to global volumes. It's because of a lack of infrastructure. That's partly what we aspire to do, to help solve those challenges, to make it easier and safer for people in Africa to access crypto.
Yeah, that last point about safer, that's what strikes me as someone that's never used one of these peer-to-peer services. It seems ripe for scam activity, right? Where I'm advertising, send me money, I'll send you Bitcoin, and then I never send the Bitcoin. That seems like a fairly easy scam to run all over the place, right?
Yeah, so I think in the private messenger chat rooms, that I think there's a real risk there. But with the second model, where a centralized entity is the custodian, they won't release the crypto to the buyer unless the seller confirmed that they've made payment, right? So there's some measure of control, but there's still some exploitation that's taking place as well. So
I'm curious kind of more broadly when you think about the scams and other types of fraud happening, like how do you approach that? I would imagine it's challenging in certain markets where you have a relatively newer population of users who are learning about crypto for the first time. It seems like they're going to be primed to chase the advertisement for the unreasonably high yield savings opportunity. I would imagine you all spend quite a bit of time thinking about how to protect users.
No, definitely. And I think last year in South Africa, earlier this year, the industry got together and we worked with the Advertising Regulatory Board, which is the watchdog for public advertising. And Luno spearheaded those efforts, and we drafted crypto-specific inclusion for the Code of Advertising Practice. And that's been accepted, it's been published, it's been updated, and certain rules have been put in place. For example, you have to include risk warnings in any ad. And it provides rails and guidelines to broadcasters that started accepting advertising money from scammers in South Africa. And they have to do a lot of due diligence now before they accept any advertising money. So I think that's a good example of how the industry came together and we decided we need to address this issue. But from a Luno specific perspective, try and attack this problem from many different perspectives. I think firstly from a technology side of things, and of course we use Chainalysis for that, and Chainalysis, the on-chain visibility that we have through that, I think has helped us to prevent customers from sending crypto to potential scams. I think one recent example in SA is Mirror Trading International, where through Chainalysis we were able to identify customers who were sending crypto to this scam. At first we warned them, and later on we actually blocked the payment. So we knew it was a confirmed scam. It was in Chainalysis' list of confirmed global scams, right? So from a technology perspective, we rely a lot on our service providers to do the monitoring. We also, obviously, the issue of phishing and fake websites and impersonation is also quite real. And through a partnership with a service provider, we were able to remove more than 200 fake phishing links or fake websites over the last 12 months, and more than 1,000 fake social media profiles. So we're really trying to clean that up as much as possible. And then we have quite a big anti-financial crime team as well, and they have relationships with local banks in SA, had in Nigeria as well, and we also then support the banks in investigating and also recovering payments made into our bank accounts that was a suspect. So on many fronts, it's a big issue and it's crippling. And actually, scam activity was one of the main reasons why Luno had to exit markets like Zambia and markets like Uganda eventually, because of absolute rising scams, making it very, very difficult to operate in those countries.
Wow. And this was because you had people who were impersonating Luno or Luno executives and ripping people off?
Yeah, so that, and people pretending to be agents of Luno salespeople, offering returns to the general public. People, with apology then, flat out is people scammers started reporting Luno to law enforcement, saying that Luno stole my funds or Luno lost my money, in the hope that there is a settlement payment or there's a bribe or something. And so it just became so crippling. And it's a real challenge. And then people always understand the cost of operating in any market if you follow a centralized exchange model, but more so in emerging markets, where you have to build these infrastructure, the integrations between banks and the exchanges. We have to build that from scratch, right? It's a real challenge.
I saw that even you were a victim of this, where someone ripped off your LinkedIn profile and was running around offering crypto services using your photo and your background.
It's one of those things, I think. My wife obviously had a heart attack when she saw that. And she actually also got impersonated.
Oh, no.
But I think it's part of the game. There will always be bad actors out there try and deceive the public and get the public to part ways with their hard-earned money. And we have a big responsibility as the industry, not only Luno, but all exchanges, whether you peer-to-peer or centralized exchange, we all have a big responsibility to act as the first line of defense for our customers, right? So it's an area of the business where we continue to invest in terms of headcount, in terms of financial resources. And as I said, just using technology has been greatly useful for us in that regard.
I'm curious, internationally, maybe zooming out from Africa a little bit. I know that Luno recently left the Singapore market, and I'm just curious if you can share kind of the strategy and drivers behind that business decision.
In terms of Singapore, I think that was purely a business decision for us, in evaluating our strategy and our global footprint. We still have operations in Malaysia and Indonesia. As I said, we fully licensed crypto exchange in Malaysia. We have a local office in KL as well. Malaysia, in fact, is our second largest market globally for Luno. So still fully investing in the region, Southeast Asian region. It's still an important continent for us, or area for us. We've always been pro-regulation. We've always worked very closely with authorities in the UK, to ensure compliance. Whether this was enforced or not, we follow a proactive approach there. So adapting to working with regulators in the UK was nothing new for us, right? It's part of our DNA. The recently announced UK regulations, the FinProm regulations, I think it's an important step for the crypto industry, and it supports Luno's mission to ensure that all our customers invest responsibly. So I think we're working very closely with the FCA in the UK. We still operate in the market. We've not exited the market per se. We're still serving our existing customers, in the most responsible way possible. And we will continue to be agile and adapt to regulations. So
it's one of the things that's really interesting to me as we look at kind of the evolution of the regulatory landscape and kind of the relationship between crypto industry and traditional financial industry that's driving entry into new markets. Because I think you've also just recently won regulatory approval in France, and I would assume that's under the new MiCA regime in Europe. And so it seems like there's kind of a push and pull action happening, right? Like a lot of companies that I've spoken to recently have either exited the US market or contemplating that decision because of the lack of regulatory regime here in the US. And it seems like there's a draw into the European market. Am I thinking about that correctly?
I think so. I think there's a clear theme globally now, and we see the regulators moving into two directions. So I think the first theme or bucket is AML regulations. And I have to say it's been fairly consistent across most global markets. And that's things like AML, screening transactions, having the ability and the expertise to report on suspicious activity. And so that would typically require registration with a local financial intelligence agency. That's one of the first steps we take, when we consider moving into a new market. Is it possible for Luno to register with the local financial intelligence center? And then secondly, from a market conduct perspective, there has to be a regime from a market conduct perspective that scrutinizes the operating models of crypto as service providers, ensures that they have sufficient capital, they have the skills, the ability to actually safeguard customer funds, to safeguard customer information, and to ensure that they have good corporate governance. And I think those, if you consider those things that I just mentioned now, I think those were probably some of the main reasons that led to FTX's downfall as well. Proper risk management or lack of proper risk management, the lack of good corporate governance, right? Those two regulatory themes we absolutely welcome. But, from a centralized exchange perspective, I think there are many other challenges, right? Firstly, the cost to enter and localize your operations in an African market, or any market for that matter, with relatively low levels of adoption can be extremely costly. Secondly, liquidity, right? So in many cases in Africa, and I think that's why we've seen limited growth in other markets outside these core countries, is there's simply not sufficient liquidity locally. So if you think of a use case like remittances, right? Someone, the African diaspora that resides in Malawi, works in South Africa, and they need to send money back home to their family. They cannot spend their crypto in Malawi because vendors don't accept crypto as a means of payment. And it's not easy for them to convert their Bitcoin into local currency. So the lack of liquidity in these markets also make it less appealing to global crypto businesses to set up operations there, because it takes between 3 to 4 years to build up sufficient liquidity. You reach a point where you're able to provide a fair quote to a customer when they want to buy crypto. There's sufficient liquidity, not only on the buyer side, but also on the sell side. So it must be as easy as selling a coin as it was when you bought the coin initially. So yeah, there are many challenges, from that perspective, but mainly regulatory uncertainty that is making banks the de facto regulators in many African markets. So the banks decide who gets to play or who gets to stay away. And secondly, the lack of liquidity locally, and also because of the fact that many African markets have exchange control regimes. So it's very difficult to send dollars in and to send dollars out as well.
It's fascinating to watch the ebb and flow of into and out of other markets. Shifting gears a little bit, I'm curious your take on DeFi. And this is something that I'm always interested in, the perspective of the centralized exchange operator in the realm of this new layer of technology that I think in some ways is seen as complementary to centralized exchanges. In other cases, I think people imagine sort of DeFi becomes the future of all crypto exchange, right? It's all facilitated by a smart contract living on chain rather than a company really operating there. What's your take?
Yeah, I think centralized exchanges and decentralized platforms, I think they're complementary, right? Centralized exchanges make it possible for people to enter the crypto landscape using the fiat currency. I'm particularly excited about the potential for DeFi in Africa because you have a new generation of investors that don't necessarily hold traditional assets. It's people that for the first time have been able to come online, get access to a smartphone with the internet. They don't necessarily have traditional investments or traditional investment apps, for many reasons. But, for example, they cannot meet the minimum deposit requirements. So crypto created an absolutely new class of investors across the African market. And I think for the first time, it's going to give those investors holding crypto assets access, for example, to capital. So they can, through decentralized platforms and protocols, actually borrow funds against the crypto collateral to start out their local businesses, in Africa. And I think that is probably the most exciting use case for me locally on the African continent. It's the power of crypto at play real time, right? From a Luno perspective, I think we obviously, as I said, we think that we are complementary to many of the services offered by decentralized finance, lending, borrowing, staking, yield farming. We recently launched a Luno Ethereum staking and Cardano staking wallets as well. But I think we think that sensible long-term approach, getting the basics done right, that's our core mission at this moment, and we think that will give us as a business the best shot at upgrading the financial system, playing that role as people's first experience with the crypto market.
I'm curious too about real-world asset tokenization. Like this is in the headlines of all the crypto trade publications that I read regularly. It seems to be one of the hotter areas. Are you seeing any moves in South Africa or maybe more broadly on the continent to tokenize, corporate debt or government debt and actually put that on chain?
Yeah, so I think, again, markets where there are more regulatory clarity, I think you tend to see more conversations like this taking place. Pan-Africa, absolutely zero that I'm aware of, but in South Africa specifically, there are many financial institutions that are exploring opportunities to tokenize corporate debt, for example, putting bonds on the blockchain, tokenizing bonds. So there are really interesting opportunities locally in SA, and I think probably relatively soon, traditional crypto exchanges will probably soon evolve the offering from pure cryptocurrency tokens to more real world assets as well. So it's an avenue that's going to open up significantly over the next 12 to 24 months in SA.
Yeah, it's exciting. This has been a fascinating conversation. I love to end the episode looking to the future. When you've got 8 years of experience in this industry, which is probably a lifetime for most people, I'm curious, what are you thinking about over the next year to 2 years as being most exciting in the crypto landscape and for Luno's business?
Yeah, I think we will start seeing exponential growth. I think not from a crypto price perspective, but the after effects of a properly well-run and regulated crypto market. Not talking about crypto assets itself as being regulated. I'm talking about regulation around the platforms, the intermediaries that provide crypto-related services. I think, as we've seen in the US, and each of these regions are on different maturity and different growth curves, right? We've seen financial institutions into the market in the US 2, 3, 4 years ago, right? In SA, that's about to happen. And I think that's hugely exciting. It's going to lead to a lot of inflows of capital into the crypto market locally. It's going to lead to a more robust, stable crypto industry as well. And it's going to lead to more partnerships between crypto firms and traditional firms to drive adoption. So I think in the institutional opportunities in SA, I think, and as soon as regulations become clearer in Kenya and Nigeria, will be absolutely huge and will have a massive impact in the adoption curve of crypto locally. For example, quite a large chunk of the SA population with disposable income use financial advisory firms to manage all their investments. At this moment, no financial advisory firm are able to render financial advice or intermediary services with regards to cryptocurrency, right? So that opens, the regulatory regime will open up and create a completely new set of potential investors into the market. I think we will continue to see Bitcoin as a store of value, or crypto as a store of value, as probably the most predominant use case. Although we've had exciting projects in South Africa over the last couple of months on the crypto as a payment channel, payment network use case. So one of the largest grocery outlets in SA, Pick n Pay, a couple of months ago announced that it's not possible for you to buy groceries with Bitcoin. So at checkout, you scan a QR code. Luno has also enabled that feature, so Luno clients can spend their crypto. That's just the very, very early stages of the spend use case. And I think it will develop as we see more critical mass of crypto holders, that spend use case and payments use case will start to develop. For now, I think from a transactional perspective, it will probably still be limited to cross-border payments, remittances in emerging markets at large. And then, I think I'm extremely positive about Luno's prospects over the next 12 months to continue to evolve in a crypto app, to continue to build on our current suite of products, staking, crypto bundles, and to continue to upgrade our product in line with what our customers want. And then lastly, I'm very excited and passionate about the impact that crypto can have on people across the African market. That's mainly why I'm still in the crypto industry eight years later. So I'm hugely excited about countries like Ghana, countries like Kenya, countries like Uganda, to work with Luno and to put Luno in a position, to be able to offer, a safe and easy way for people in those markets to also access crypto. So I think I'm very, very, very excited about the prospects for crypto in the African market, and we're working day and night at Luno to make that a reality.
Really exciting. Marius, this has been a fantastic conversation. Thanks so much for joining us on Public Key.
Awesome. Thank you again. I really enjoyed the conversation.
Hey there. Thanks for listening to another episode. Our team's been working hard to make our content available on all the major platforms. So do me a favor. Right now, take out your phone, head over to your favorite social media app. You can subscribe to our new TikTok, our revamped YouTube, sign up for our LinkedIn newsletter, and of course, follow us on X or Telegram. Just search for @Chainalysis. Now, after years of speculation on how blockchains could augment video games with player rewards and ownership of digital content like NFTs, Axie Infinity burst onto the scene in 2020 and became the biggest Web3 video game anyone had seen. But then, unfortunately, Axie Infinity suffered a massive hack, losing over $600 million from their cross-chain bridge protocol. And we've seen some serious declines in usage since then. But many remain excited about how blockchains, video games, and the metaverse can intersect to create new economic paradigms in the world's biggest entertainment industry. And those changes could benefit both players and the companies that create the games. So this week, our team has a great new blog that's focused on the fundamentals of blockchain gaming and includes some analysis of projects that are successfully utilizing blockchain tech, and also discusses where some of the limitations and challenges still exist. Head down to the show notes, you'll find the link to the recent blog. Enjoy.